Just a few days before the launch of StockCharts.com, the Dow Jones Industrial Average closed above 10,000 for the first time in its history. 5 weeks later, the Dow Jones pierced 11,000. Meanwhile, the Nasdaq Composite posted its best ever annual return of 85.59% in 1999, then popped another 25% in the first 2 months of 2000 before the dot-com-led bear market settled in. Economically, unemployment rates reached their lowest levels in 30 years, and for the second straight year, the federal government operated at a budget surplus, following 3 decades of deficits. Interest rates were on the rise as the Federal Reserve raised the Fed funds rate on 3 separate occasions to battle a rapidly rising GDP, which reached 4.8% in 1999, the highest level since 1984. The Fed funds rate ended 1999 at 5.5%, more than twice the 2.5% level where it stands 20 years later. The year's gains occurred as the U.S. economy was poised to record the longest expansion in history. A lot of the market's records were set in 1999. Here's a few examples. The Nasdaq Composite rose 85.6%, the biggest annual gain for a major market index in U.S. history. The Dow Jones Industrials gained 25.2% in 1999, a record 5th year in a row that the blue chip index posted a double-digit percentage gain. The S&P 500 rose 19.5%, a record 5th straight year the index posted a double-digit gain. A record 203.9 billion shares were traded on the New York Stock Exchange, and a record 265.6 billion shares changed hands on the Nasdaq. But despite the headlines about records, analysts noted the gains were not widespread. 64% of stocks trading on the New York Stock Exchange declined an average of 28%. On the Nasdaq, 50% of stocks retreated an average of 32%. 1999 proved to be a very selective market. Groups like dot-coms, high-tech, or telecom did very well for a choice group of people, and if you didn't own a stock in those areas, you most likely did not love 1999. The technology sector dominated the market that year, and 1999 closed with Microsoft, the world's largest software company, having the largest market capitalization at $614 billion. That same year, Microsoft and Intel, the world's #1 chip maker, were added to the Dow Industrials. The reconfiguration of the blue chip index highlighted the importance of technology in the modern economy. It was further exemplified with the addition of internet issues, like Yahoo and America Online, to the S&P 500. Let's take a look back on some of the more popular stocks of 2019 and see how they compared in 1999. Apple's stock price was a mere $1.13. After breaking from a declining trend and consolidation zone at the beginning of the year, Apple's stock price practically tripled to end the year at $3.23. Still a bargain, I'd say. Apple is in a nice rising trend following the January gap down and price low. February, Apple was in a consolidation mode, moving mostly sideways, but it has since broken out. After a healthy pullback to $186, price appears ready to make a run past $197.50, which is currently Apple's high for 2019. I'd look for higher prices here. Amazon was at $85.50 on April 1st, 1999. It was a volatile year for Amazon, which was still mostly an upstart that hadn't ventured very far past online book sales. It finished the year lower at $76.12. Also still a bargain. Amazon had a great run in early January, but spent most of 2019 consolidating between $1,580 and $1,720. Since then, a nearly textbook flag has formed, and price is breaking out of it right now. I suspect we will see higher prices going into the spring and summer for Amazon. The minimum upside target of the flag formation would put Amazon at around $2,015. Cisco was trading at $21.72 on April 1st. A breakout into a new rising trend began, but it wasn't until November when the company's stock rose quickly. By the end of the year, it had nearly doubled to $42.34. Cisco has had a great run so far in 2019, coming off the January low, similar to a lot of other stocks. The rising trend is intact and price has just broken out above resistance at $54. The MACD is turning up and could suggest this rising trend is just getting started. I would look for Cisco to move higher in 2019. April 1st, the Dow Jones Industrial Average was at 9,832.5 points. That month, the Dow hit new all-time highs as it soared past 10,000 points to reach the 11,000-point milestone. After a difficult correction from September to mid-October, the Dow corrected back down to test the waters below 10,000, but it left it behind and closed at a record for the year at 11,497 points. The Dow has spent most of March moving sideways. Best news is that what appeared to be a double top never was confirmed, and in fact, price turned right back around before testing what would have been the confirmation line at the March low. I always find that when you get a bearish pattern and then find a breakout from that bearish pattern, I usually consider that especially bullish. Resistance is weakening at that 26,200 level, so I would be looking for a breakout there. The S&P 500 was 1,293.72 points on April 1st. Volatile trading had the index swinging from a July high at 1420 down to a low around 1235 in October. However, by the time the year ended, the S&P had set new all-time highs and finished the year at just above 1,469 points. The S&P 500 has enjoyed a nice rising trend since the January low, although it has sputtered a few times along the way. The current breakout above the March 2019 high is very encouraging. Note the price breakout is arriving just after a positive crossover of the 50-day EMA above the 200-day EMA. This is also known as a golden cross, so it is an attention flag we should pay attention to. Volume on this breakout is healthy, and it does suggest that we will see some good follow-through to the upside going into the spring and summer.